You're up 48% year to date on returns.
Yep.
How have you done it?
Well, we've had some growth stocks that have performed particularly well. Our best performer was DroneShield. We bought on the 6th of January at 82 cents. Admittedly, it fell a little bit after we bought it down to a low of 52, but made not only a full recovery, but hit recent highs of $6.40. We were able to exit at $6.16. Thank God as we did at the time.
Yeah, well, you timed that well, haven't you? Is that what you're actually looking to do? Are you trying to time the market?
I look at stocks with a 12-month view. Ultimately, I'm looking for companies that have a story that can capture the market's attention. And at the time when we entered DroneShield, the Russia-Ukraine war was kicking off. There were headlines about how big a problem drones were. There wasn't too many companies out there that could solve that problem. So that was the main reason why we entered that stock at the time. And yeah, it really was a story that could capture the attention of the market and ran really hot.
So I'm intrigued then as to what prompted you to sell.
Look, it ran too hot relative to earnings. They had their full-year earnings and showed a net profit of just $5 million. And I'm there looking at the market cap. This is a $5 billion company at the time, and I couldn't justify holding it. So quite simply, it ran too hot, and we just got out at a good time.
Any other stocks that you've done well out of more recently?
Yeah, there's a stock that we're still holding called Meteoric Resources, ASX code MEI. Totally different story. They're in the rare earths space. And the macro catalyst that pushed this higher, of course, was the US-China trade war and the recent headlines around the tariffs and China responding by potentially limiting the flow of rare earths into the US. So Meteoric have got a fantastic project over in Brazil called the Caldeira. They're not yet in production. They'll be quite a few years away, but it will have an extremely low cost of production. They've just released their feasibility study, which puts them on the very left-hand side of the cost curve. So that stock's done particularly well for us. It's currently trading around the 18, 19 cent level.
So you're quite happy to weigh into commodity stocks. What else are you liking in that space?
Well, so a big fan of rare earths. Lithium as well, although the price of lithium is still very much down towards the bottom of the cycle. I see further upside in that space. One stock that we've done quite well out of is, of course, Pilbara Minerals, PLS. That is a stock that has had a pretty tough couple of years. The price of lithium had fallen 80-odd%, and so had the share price of Pilbara Minerals, but I've got a lot of confidence in not only their asset, the Pilbara mine, and their low cost of production, but also their CEO, Dale Henderson. And that allowed us to stay in the stock through the dark times. And I think the low point, it reached $1.07 6 months ago. What really inspired me to not only stay in, but buy a few more, was the fact that the CEO, Dale Henderson, put his hand into his pocket and bought another $1 million worth of shares out of his own money. And it's that kind of conviction, that's what I'm looking for. The complete opposite of stocks like DroneShield, where the CEO is selling everything.
We completely sold out. On that point, also, those lithium stocks among the most shorted, does that provide an opportunity too? Yeah,
I've always said to my clients, these short sellers have gotten it right over the years, but they're getting too greedy and they should have closed out their positions. Now Pilbara Minerals is trading around the $4 mark, and lithium is still towards the bottom of the cycle. It is showing evidence of a recovery, but these short sellers haven't taken their foot off the gas. In fact, PLS is still one of the most heavily shorted stocks, 14% of shares on issue. They're yet to buy back. Now, I don't know what they're hoping for here. A capital raise, very unlikely, with over $1 billion cash in the bank. So I think that their greed will get them, and I think they'll be under a tremendous amount of pressure at the moment and be forced to buy shares back on market, throwing further fuel onto the fire.
Now, Mitch, do you have exposure offshore in particular on Wall Street with the mega cap tech stocks?
Look, we're a little bit bearish on the US tech stocks at the moment. One of your guests earlier in the show was talking about Nvidia's PE ratio being around the 40 level. To me, that seems a little bit rich. The historical average is around 25. Last night's earnings were solid, don't get me wrong. Tremendous amount of revenue, but the net profit is yet to be seen. So in terms of positions, we've actually hedged our Aussie exposure by shorting the NASDAQ. via an inverse ETF called SNAS. Now this is you could say quite a risky play because it's an inverse ETF that's negatively correlated to the index. It will only make money if the index falls, but it's risky because it's geared.
Are you rethinking that in the light of the NVIDIA result?
No, not at all. No. We recently entered this position at $14.50, and I think it's still trading around the $16 level. So we're still up, and it's more or less hedging our exposure to the Aussie tech sector, which we're long in.
All right, well, let's go there then. And what opportunities are you seeing locally?
So, look, although I'm bearish on the entire US tech sector, there are still some opportunities and diamonds in the rough. There's a little stock that not many people have heard of. It's called Stack. The ASX code is SKK. Market cap's about $110 million. Now, what this company does is embedded finance into applications. It's a B2B type business. Now, it's the growth that has got me excited. It's a new company. It started the year with about 28 B2B customers. It's currently got 230. Now, it's the trajectory and the rate at which they're able to acquire new customers which has got me excited. So in the last 2 months alone, this small, tiny Aussie fintech that nobody has heard about has picked up some major customers, including T-Mobile in America with 136 million customers, Robinhood, one of the largest, if not the largest brokerage platform, and an announcement yesterday, SoFi Technologies, which is a US fintech, market cap of $40 billion. And today, when I was preparing for this meeting, I saw there's another customer in the US, which is a small rural bank. So ARR for this company is growing at such a rapid rate. They started the year with $1 million in annual recurring revenue. They project they'll finish the year at $8 million. If you throw on SoFi's, there's another 4, so $12 million. That's enough to get me excited.
So as you mentioned, diamond in the rough. I'm intrigued, Mitch, then how you actually discover companies like this.
Well, I run a membership business called Invest with Mitch, and I'm close with my members, and every now and then I'll get a phone call from my clients. What do you know about this stock? And I'll do some research, and it was actually one of my members by the name of Mark put me onto it, and that's how I found the story.